Hello and welcome to the Sweeney Show Business and Law podcast. Today joining me is Fearghal Collins of Buckley Kiely Accountants. Fearghal, you're very welcome.
Thanks, David. Thanks for having me.
Yeah, great to have you here. If you wouldn't mind, I suppose, telling our viewers a bit about yourself and your company and what you do.
Okay, so I'm a partner with Buckley Kiely Accountants. We're based down in Blackrock. We have a team of about 38 people. We provide accountancy, tax services. We've got a management accounts team. We've got a wealth team. Audit, business support. So we try and provide full range of services for startups and growing business. 38
people, that's a big organisation, isn't it?
It is. It's we're in business 40 years this last November. Wow. So we've been growing about 1 or 2 people per year for the last 10 years.
Okay, well done. And I suppose today we'd just like to maybe drill down and focus on maybe someone who might be starting up a business, or maybe a company that's in their first couple of years of business. If I was to set up a company today, what kind of advice would you give somebody?
I suppose first decision.
So it's from an accountancy perspective.
Sure. Yeah. The first decision, I suppose, is should it be a sole trader or a company?
Okay. Sorry, what's the difference between both? What is a sole trader? What does that mean?
Sole trader is just an individual registering for business in their own name. Okay. It's a little bit quicker and a little bit cheaper to get up and running. Okay. But for most most business, if you want to grow and if you've got high hopes for the business, most people will go with a company. Okay. It's a lot easier to bring in people, to share out percentage of shareholdings. Sure. And corporation tax at 12.5% is very attractive and low as well. Okay.
And I think from a legal perspective, if you're a sole trader, if things were to go wrong, your liability is exposed to your individual assets or your own personal, whatever you might have.
Correct. That's another advantage with the company. You've got limited liability to the company. So if something goes wrong, and if the entity is being sued, it's the company, which is separate to the director. So the director's house, personal assets, and so on are kept separate from that business.
Yeah, I think so. Usually people just set up in a sole trader because they're not aware of what they should be doing, so they might have the first year or two just to see if their business is going to work and to trade, and then they might realise, A, I need an accountant, B, I might need a solicitor, and C is that I've taken advice from my accountant now and I need to set up a proper legal entity to do business.
Correct. A lot of small business will stay a sole trader long term. If it's maybe a side business or a part-time thing, sole trader can work okay, but if you want to go full-time, if you've got hopes for some high profits and maybe excess profits to what you need to draw, then you're looking at keeping some money in the company. 12.5% corporation tax is reasonable enough, and it's a lot easier just to grow.
So in the I know historically, just say on a set up a company, so a limited company, that means you're limited by liability, and then anybody you put into the company, that's your losses. And if to set up that company, I know previously you needed directors, so you had people who owned it, then you had shareholders, and you had a company secretary. But there was a new piece of legislation brought out there. I think is it the Companies Act 2014? Is that correct?
Yeah. So previously,
and that kind of changed the landscape a bit, didn't it?
Correct. Previously, you would have needed at least 2 directors. Okay. Now you just need 1 director. Okay. But you still need a company secretary. Okay. But that secretary can be a limited company. Okay. So we can provide the service of providing the company secretary as a limited company. So an individual can come to us, be the 1 director, set up the company, we can be the secretary, or another limited company can be the secretary. What
exactly is the company secretary? Because people I think have this perception that it's actually like someone who works in an office. It's not actually a secretarial work, it's an identifiable profession, isn't
it? Correct. I mean, the secretary is responsible to ensure that the returns of the company go into the company registration office on time. Okay. Minutes meetings are held on time. The share register is kept in order, and so on. Okay.
So just to go back there, so if you have a limited company, there are certain rules then, so you must submit accounts every year?
Correct. So I suppose one thing that we see as a problem with startups, they might even form the company themselves, which is fine, but you need to bear in mind that the first return to the CRO is due 6 months after incorporation. And if you miss if you miss that date, then you've got late filing fees straight away. Okay. After that, then it's once every 12 months the return must go in.
And when you say return, is that telling them CRO, so that's the company registration office, which is kind of an independent government organisation that controls running of limited companies.
Correct.
Is that correct? Okay. And so are they interested in your tax return, or are they interested in the formation, the people who run your company, or both, or what are they looking for?
The company registration office are just interested in keeping track of the directors and shareholders of the company, and that the returns are filed on time to themselves. They're one entity to keep happy. The other one is the Revenue Commissioner's tax office. So once a year, the company has a tax return to file 9 months after the year end. Preferably a lot earlier than that, not left to the last minute.
So I think, is it that you have to do one clear calendar year of trading, is it? And then you lodge your revenue return within 9 months at that time, is that correct?
Most companies go with December year end. It can be any month during the year. Most will go 12 months from date of incorporation when the company is formed. And then you got 9 months from your account's date to submit your tax return. And
at what time, is it a particular time of the year that you make your tax return, or can you do it any time?
It can be done any time up to the 23rd day of the 9th month after the year end.
Oh, right, oh, I see. That's why a lot of people with November is kind of generally considered tax return time.
November is income tax time for directors. So for the company, if you're a December year end company, 23rd of September is your deadline for filing.
So I know we're going to jump back here. So then if you're a sole trader and you have to make a tax return, it would generally would it be November?
Correct. So the middle of November is the deadline for online returns for income tax returns. And all directors of a company must file a personal tax return as well, even if it's just the P60 or the earnings from their own company that must go on it. But if you hold more than 15% of a company, then you're a proprietary director, and you must file an income tax return.
All right. So if I have my own company and I'm under the new constitution, or sorry, the new legislation, it's one directorship, so I potentially could have to make 2 tax returns per year.
Your company will have to file the corporation tax return, and you personally will have to file your income tax return.
Interesting. So just go back on the new legislation that came in, because previously, if you wanted to set up a company, you had to have like a memorandum of association, an article of association.
Correct.
And they were kind of like the roadmap of how you wanted to do business and this description of your business.
They were, and they were sometimes a bit restrictive, even though the listing of them seemed to include everything you could imagine. When technology changed and new things came out, they weren't even imagined when the company was formed. So the new version now, it's really open to anything. Anything can be done within the company.
And it's just called a constitution now, isn't it? So you rather than have a number of documents, you just have one document that's kind of like a catch-all.
Correct.
So if just to bring it, I suppose, right back, what is tax? Like what is it? Is it payment to the government, or is it like how do you pay tax? What are you paying tax on? And what are the general rates that people pay tax?
So if we stay with a company for the moment, the tax is calculated on the profit for the year within the company. So it's literally looking at your sales less your expenses, your purchases,
cost
your overheads and wages and so on. So in a company, that profit figure is calculated at 12.5%, and then that's returned once a year to the tax office.
And then what is there certain items that are categorised as business expenses, and there are things that not? Is there personal expenses, travel, all that kind of stuff, or how?
Yes. So business travel is allowable if it's fully for the purpose of the business. The words that the revenue would use are wholly, necessarily, and exclusively for the use of the business. So
that's pretty broad definition, is it, or is that in her definition?
It's narrow enough, because if you consider those 3 words, wholly, necessarily, and exclusively, then if you have any mix of personal within that, they're disallowed for business purposes. So the typical example is that people will go and they go to a conference in the US for 2 days, and they'll make a 2-week holiday out of it with the family. Under revenue rules, then the whole lot is not allowable. And
who is that advice you get from a good accountant that is familiar and experienced in those, or should you know yourself that this is a company expense, or is it your accountant that would guide you?
It's the accountant will guide you. I mean, people can't be expected to know these things up front. That's why they engage us to give them advice on that. So every set of accounts that we prepare is prepared by an accountant, and it's reviewed in-house, and it's also reviewed by the tax section. So the tax department will go through the expenses. They'll look at what is allowed, what's not allowed. But I mean, before that, we'd be talking to the client. We'd like our clients to contact us and ask the question when it's happening, rather than afterwards. Correct.
And if let's just say we go back to, say, a startup, as a young person setting out, what's the kind of mistakes that people can make in their first year or 2 of business?
I suppose the biggest mistake.
I suppose we're trying to give advice to people to kind of to prevent those mistakes.
Sure.
What would you advise?
The biggest mistake I see is that people don't look for help or advice or engage professionals early enough. They'll often go off and form their own company, trade away, do their own thing for 12 months, and then come and say, okay, I think you need to do accounts now. then they potentially missed their first Form B1, so they're late with the CRO.
Okay.
They've late filing fees incurring every single day that they're late.
Okay.
They might have gone and spent money that they thought was for business, which mightn't be allowable because they haven't asked the question. They could be into overdrawn director's loan account within the company. But even outside the whole account side of things, trying to do everything yourself is an issue.
Yeah.
You know, you can't be the marketing person, you can't be the bookkeeper, you can't be in the business.
Perhaps if I'm if my business is, say, I'm an artist, I'm putting out works of art, whether that might be digital or paintings, whatever it might be, I don't really have the headspace or the knowledge, or my expertise is in my craftsmanship. So it makes sense that I would actually meet someone that's a professional and independent to give me that advice.
Correct. I suppose we see a lot of business in the startup space. The tech space is very strong, especially in Cork. The person who has the idea for a product, they mightn't be the person who can develop it and code it and so on. So they've got to look at, it's decision time. Then you say, okay, how am I going to make this work? I can't do everything myself. Will I bring an investor so that I give away a percentage of my business to an investor to get the money in to pay the staff that I need? Or do you go and look for a co-founder early days? And yes, you're giving away percentage, but you're getting someone who's going to really care about the business and help you to develop it.
Okay, and then just on that then, I suppose you're looking for somebody that has experience and knowledge and has contacts that might help you with the business.
Yeah, and I suppose the professional advice as well, if you talk to your accountant early. We give a 1 hour free consultation to everyone.
Very good.
It's often more than that, but I mean, there's no cost in coming to have a chat with us. Hopefully everyone goes away with some advice at the end of it. We'll sit down with them, we'll go through terms of business, which is almost like a menu of fees, so they'll tick the boxes for what they need. They'll, depending on their situation, they'll see exactly what the cost is going to be. Then they can go off and trade for the 12 months, or just keep in contact after that. And same with the legal, I mean, with yourselves. If the shareholders' agreements to be done, they need to be done at the very start. If once the dispute happens and the agreement isn't in place, problems happen.
I think that's wise and prudent that in any relationship, whether business or otherwise, you need a contract to describe the relationship, how both parties want to enter the relationship, but you should always have an exit, and that's not wishing bad luck on a business, but things do break down, relationships do stop, so it is prudent to take accountancy advice and legal advice when you're starting out. If the current, I suppose, business environment at the moment, is there any changes you think coming down the line or anything out there? Is there going to be more acts or more legislation coming in?
I suppose one change that is happening from the 1st of January 2019 is that the payroll procedures are changing quite a lot. We're going to kind of a live version of payroll. So if on the
this is obviously, if you have staff, you need to you pay salary and pay wage to staff, and that's as an employee you're entitled to your weekly wage or monthly wage, and you're entitled to a pay slip, which is identifying the income that you're receiving and then how your tax is deducted. So obviously a PAYE worker, they make their own contribution towards the taxes, and then as employer you pay PRSI and all that kind of stuff.
Correct. And I mean, even if you have your own company and you're the only director and employee, you've got to run payroll for yourself to take your salary out. So from
a question. What's the difference between, maybe this is a sole trader question, between drawings and salary?
So drawings is applicable to the sole trader. If there's profits there, they'll draw on them month and month or at the year end. For a company, the company is a separate legal entity. That's important, I suppose, for people to bear in mind that while they're a director of the company and they effectively own it, they're also an employee of the company. So they decide on a salary, they take that salary through payroll. And from the 1st of January 19, it must be live and up to date. So that if you're taking an amount of money on the 31st of January 19, it's got to be reported to revenue on that day. Whereas previously people might have caught up for a month or two and so on, a bit more flexible, where that'll be gone next year. And so I just go back and so on to the payroll changes. So what are you predicting from the 1st of January 2019? Correct. Then you just need to make sure that if you're taking a salary, that you return it on that day. Live to revenue. That's the biggest change.
Is that more work for everybody then, or is that? Do you think that's a better system?
It's probably a better system because it forces people to be on top of payroll and up to date, and then they don't leave things lapse for a couple of months. And because once payroll is paid, the tax and PRSI is due on that. So it'll force people to run payroll right up to date. And once you have a payroll package, then there shouldn't be any problems.
You'd get an independent company to kind of monitor it for you and control it.
Correct.
And so just for people who wouldn't know then, so as an employer and you have employees, whether it's 1 employee or 25 employees, you make the income, sort of peer assigned pay contribution for the employee direct to the revenue. So you make that payment every 3 months. You make that, or
it depends on the size of the business.
Okay.
When you start, your first year is more than likely going to be monthly.
Okay.
So if you run payroll for this month, April, you pay your payroll on 30th of April.
Sure.
You have until the 23rd of May to file your Form P30, which is the form that returns the tax PRSI and USC.
Yeah. Okay. And that's your obligation, isn't it? You, as an employer, you must do that.
Correct.
You must make that return.
Yeah.
And then so we spoke briefly about penalties and things like that. So if is there the CRO penalties and there's revenue penalties potentially, is there?
Yes, so the CRO, as I mentioned, the first return, if it's late after the 6 months, there's €100 late filing fee plus €3 per day, which will add up pretty quickly. But more importantly than that, if you miss your second return with the CRO and don't file your accounts on time, then you go from audit exempt company into an audited company for 2 years. And that will have
you're kind of a red flag over your company, really, do you?
Yes, plus you've got to have to go through the process of having an audit carried out and the cost of having an audit carried out. Which is unnecessary for small companies.
Completely unnecessary, isn't it?
Yeah.
Well, Fearghal, listen, it's been great to have you here today. Thank you very much.
Thank you.
So if people wanted to contact you, how would they get in touch?
So buckleykiely.ie is the website. 4350-777 is the phone number. My email is up on the website, so you can contact me directly. I'm happy to meet up with anybody.
Great, well, that's perfect. Listen, Fearghal, thank you very much for joining us today. It's been a pleasure.
Thank you.
Thank you. Cheers.